Hello and welcome everyone to the week ahead commodity reports, where we of course will be reviewing the markets for the week ahead. So as we go into a new week here, we have seen hedge funds and money managers, they've increased their net long positions again in the latest week with gold. And of course, this follows on from last week where we saw the European Central Bank expanding its massive quantitative easing program by another 500 billion euros. And off the back of that, we saw platinum prices surge 4% in 1 hour. Palladium prices, they broke out over 1,000 points, and gold and silver prices also gained. And with that, of course, we've been able to maximize. We had two positions on palladium, which are currently up over 4,000 points. As we mentioned to you on Tuesday's report, the combined total of both of our positions across the stacking of gold trades and also the stacking of silver trades as well, of which we currently have 11 positions right now. If you had the same positions on, each 10 lot contract that you would have running on all of those positions would make you over 1 million, as we were up over 4,000 points on gold and also up over 570 points on silver trades. Now, as we continue to move into a new week here, the focus now switches over to the Federal Reserve to see whether they're going to go down the same route of quantitative easing as the European Central Bank here. So that's going to be on Wednesday, where we have the FOMC statement. And we've seen an incredible run so far in 2020, where many hedge funds, money managers, banks, institutions, they have announced multi-billion profits in 2020, trading the volatility. Commodities have been one of the best performing assets this year, and this market is just getting started. We've seen platinum prices in the last month alone break out 28%. Crude oil prices, they're up 47% in 6 weeks. We've seen the biggest rally in a decade, whilst copper prices, they've surged 85% since March, hitting 9-year highs. And Goldman Sachs have put it best that we are moving into a secular bull market on the commodities. You do not want to miss out. But as always, you need to know how to trade the volatility. It is not just simply a buy and hold market. You need to know the key levels to enter into trades. More importantly, where to actually bank profits. Be nimble. Make sure you're banking profits regularly. This is far more lucrative for you than simply just buying and holding. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So first of all, let's just move over to gold here. And what we observed on gold was on Friday, many traders again getting tricked to sell and panic out of their positions here, where you had the sell-off on Friday. You broke down into an area of liquidity here. We've continued to use this opportunity of the pullback to stack further positions on both gold and silver. We've then seen a nice positive close on the day there. So we've also seen gold price in a number of other currencies such as the euro, Australian dollar, and the pound have a decent breakout to the upside on Friday. And now heading into a new week, all of the focus now switches to Wednesday's FOMC statement and also the stimulus bill in the USA. So what's happened on Friday is essentially with this pullback in price, we've seen many retail traders get tricked, selling short into a break of a trend channel and also panic selling out of their longs after the sell-off following on the Friday after the European Central Bank announcement. But it's the usual trickery here with the market, where essentially all we've done is come back down to an area of liquidity. Buyers have come back in at this zone. You can see that very clearly around that 1825 to 1830 handle. Traders who very simply put their stop loss below the previous day's low, they all get taken out of the trade, only to then see the price action reverse into the close. And you can notice this on silver a lot. We keep on coming back down to liquidity at that 2350 zone. This has held multiple times, and we've got entries from much lower here around the 22 zone and also the 23 zone. What I'm looking at as we go into next week is whether we can continue to build up a bit of a base here, see if we were to get a breakout later on in the week, especially if we can start getting a move above the 24 US dollar per ounce level. If we break and close above that, make a move up to 24.50, then 25, you can start making a move back towards the swing highs here. So we've continued to find a lot of support here for silver around that 23.50 handle. But lots of times this is causing traders to get very frustrated out of this market market as we just continue to rinse up and down, and this is enough really to cause many traders to come out of the market, try and reassess it, and potentially actually get on the wrong side of the market. Into next week, we're going to get a decision here, going to, of course, the FOMC statement, and then, of course, last week we had the European Central Bank announcement, which overall was a positive for the metals. Platinum in particular, we had an impressive breakout within 1 hour, 400-point surge on platinum here. Now, what I would look at right now, in fact, is the gold to platinum ratio. So what needs to happen after platinum has gone up over 28% in the last month is a reversion to the mean, and we now need gold prices to catch up to platinum here. So the platinum to gold ratio is starting to pull back, which means gold now is outperforming platinum again. So if you do see further corrective price action with platinum, that's a good thing for gold here as we go into next week. If you have a look at gold on the higher time frames, you can see here where we have been basing, we've been finding support over the last couple of weeks here. You've got, again, a higher low, a higher high, and also a higher close. And a lot of this will get resolved as we go into next week from the FOMC statement onwards. This will be very important. But what has happened here in the latest week for many traders who trade gold is they've missed out on this capitulation where we moved 1,000 points in a week. As I mentioned to you previously, we have been building up our positions here from 1,773. But not only do we have one position on gold, we had stacked into 8 positions here. So we've got 8 trades on gold, 3 trades on silver, okay? So we've continued to stack all of those. So that means when we've had this big breakout in the last week, we've been able to capitalize on that, take some partial profits off the table, and also make sure that when we're getting these sell-offs and pullbacks, we can also reload as well, which has been perfect. Again, it's a trader's market, not just buy and hold. So what has happened to a lot of technical traders here is they panic sold out of their long positions. They've then FOMO'd in on this breakout to the upside. They've bought in too high. Once they get their technical confirmations on a break and a close above 1860, so they start buying, unfortunately, right at the highs here, only to then see gold pull back 500 points and take them out of the trade. And as soon as that has happened, then we started to find support again here around that 1820, 1830 handle, which has been a great area for us just to reload on further trades after we banked profits on many other positions here as well for gold. So right now, it's very important to be aware of how the hedge funds, the money managers, the banks, and institutions are trading in this market, where the key areas of liquidity, where they reside, the cycles that we're seeing day to day, week to week, month to month, the specific capital flows, and the major catalysts here that we're seeing for breakout. So as we mentioned, palladium broke out 1,000 points in a day. So you do want to make sure that you're able to maximize, get exposure to these very lucrative markets. Platinum in particular, hedge funds and money managers have been building their net long positions over the last month and really capitalizing also on this 28% breakout. It's a trade opportunity that we identified with you in detail all the way back when we were building our position at $873 per ounce. And since then, this price action has rallied over 2,000 points to the upside. And with that, at the moment, if you're on furlough, if you're working from home, this is a perfect opportunity for you to increase your trading skills, to make sure that you're recession proof as we go into next year. As you no doubt know, lockdowns, restrictions, this is becoming the new norm. So you need to make sure that instead of just surviving in these market conditions, that you are thriving and you are properly set up for this going into next year, that you're not learning outdated technical strategies where you're using outdated indicators and technicals which just do not work. Market makers, hedge funds, money managers, banks, institutions, they know how technical traders are taught. This is why often when you're technical trading, you'll feel like the market is always knowing your positions. Like just as you buy, the market dumps. Just as you sell, the market rallies. It's because the market makers, they know how technical analysts are taught. It's giving you no edge at all. In fact, it's a detriment to you if all you're doing is trading off technicals. This is where you want to be utilizing a research-driven process to the market. You want to trade the same way that the hedge funds, the money managers, the banks and institutions are. You need to have access to data, market intelligence, the cycles in the market, day to day, week to week, month to month, the capital flows, understand macroeconomics, the intermarket correlations, the different ratios to be utilized, especially when you're trading the metals and commodities. And alongside that, you want to further compound that with key areas areas of liquidity, not only just knowing when to get in the market, but also knowing when to come out, when to bank profits. This will be massively important for you to get an edge. So with that, if you would like to find out more, join a community of successful traders and join the Live Trading Room mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive Live Trading Room webinars. You also have access to our real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivestradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.